Half of the time when it comes down to trading, it's just about waiting for the right opportunity to trade when we have optimal setups. And I think we're pushing towards that in GBP versus the USD. So if you remember and look back at the videos we covered on this market over the last couple of weeks, we said that we were creating a double top at these levels, and it was now even turned into, I will call it almost a triple top with a high here and then another high here and this one here. And just based on that pattern, if we measure from the base all the way to the top, we get a potential target of 147.78. And this could be again double top, or maybe just a huge rectangle, because it becomes a rectangle like this. Doesn't really matter. The key point is this: that if we break here, we can go substantially higher. We're not going to actually trade the full 1,326 pips unless you have, you know, above normal patience, I would say. And in the short term, it's turned into an even better for us, because when we have what we're seeing here, which is like a mini rectangle, I mean, that's the best, because we could have a very nice entry just based on this, and that then triggers that big push. And what we want to see right now is for this to push a bit higher and then stall. We want it to stall at 134. So it does something like this, for example, and then spends a day or two here and then breaks to the upside. And you know what? That may happen. We have the Bank of England. They were probably going to cut rates this Thursday. They still have very elevated rates, and they're doing this because inflation is coming down. But people are not overly bearish on the UK, and I think even if they go ahead and cut rates, I still think people are going to be buying here, because we're still worried about the US. And there's a lot of goodwill that has been destroyed by the new government. People don't really want to deal with them anymore. But more importantly, they are looking to reduce the size of their government. Europe and the rest of the world is doing the opposite. The US is defectively isolating itself with these tariffs. The rest of the world is open for business. So, for example, oil coming down crashing, obviously lower inflation in the US, but the way things are right now, people will still have to pay tariffs on things coming into the country. So, the cost of living in the US and the economy, while strong on a relative basis, will underperform, whereas in the euro area it's the other way around, and in the UK. I say the same because they're all influencing each other. So I think even if they cut rates here, I think people will still go along. And from a technical point of view, it makes a lot of sense, because if we would go along here and possibly have a stop loss, say something like this, you have a 65 pip stop loss, and then we hit that target, then you can get yourself a risk reward ratio of 12 times. But again, you're not going to really necessarily going to hold it all the way up there. Even if you just hold it to 137, your risk reward ratio is 3.7. Now, what if the opposite happens? Okay, so this is also becomes interesting. What if they cut and the GBPUSD tanks? Well, you have a mini rectangle here, and a break to 132. 35 will easily sink you to the next support level, which is 130.22. And that mini rectangle there gives you the entry and also gives you the stop loss, because price is allowed to go back into the rectangle, but not deeply into the rectangle. And if you look at it from a big picture perspective, if you really want to be long term about it, then yeah, we're probably going to go back to the midpoint of this range. So then suddenly you are dealing with this kind of setup where you sell here, stop loss sort of would go somewhere like that, and then you're looking for this, and that's a reward ratio of 6.59. So again, very good one. So it's always interesting. I think the key message here, when you have big picture levels and then a short-term pattern just at the border of that. What are your thoughts? Leave them below.